Has Lam Research, the big semiconductor equipment maker, finally gotten its groove back? Last year, this stock was just on fire. It's climbing 75%. Then the industry's growth slowed, and the darn thing stalled out. It's now up just 2% for 2018. But last Thursday, something really kind of funny happened. Lam Research reported a better-than-expected quarter with somewhat disappointing guidance. And what happens? After initially selling off in after-hours trading, the stock comes back with a vengeance on Friday, ultimately gaining 7% as investors like what they heard on the conference call. While Lam delivered a solid 37-cent earnings beat off a $40.94 basis, with higher-than-expected sales up 8% sequentially, the forecast for the next quarter was light. What turned things around? On the conference call, CEO Martin Anstice pretty much called the bottom in semiconductor equipment, predicting that this current quarter would mark the low point in demand, the result of temporary weakness that will soon be a thing of the past. That's why the stock surged. Could this be the beginning of a larger run, or is it going to be taken down like the rest of tech here? Let's take a close look with Martin Anstice. He's the CEO of Lam Research. Get a better sense of the quarter and where the company is headed. Mr. Anstice, welcome back to Mad Money.
Jim, it's a pleasure to be with you again. Thank you.
Okay, Martin, so I've gone through the conference call and all the analyst notes, and I have to admit, I always have to ask a CEO, when things are declining and they call a bottom, give me a couple pieces of evidence why you're willing to stick your neck out, because no one's asking you to do it, Martin. You didn't need to do it.
Well, I think, one of the responsibilities you have as a CEO is to tell it as you see it. We spend a lot of time dialoguing with our customers, understanding their plans for investments. As I've opined many times now, today's industry is different in many respects, and one of them is the cycle of adjustment and the relative stability and sustainability. And I felt like it was an important headline to communicate in the mix of several in the quarter. We just completed our strongest fiscal year in history, $11 billion of revenues, 40% growth. Our most recent completed quarter, the strongest in the history of the company in revenues and profits. A lot to be proud of, and the future is something we're really optimistic about.
Well, I think you're doing something that your predecessor Rick Hill did periodically, which is that he used the downturn to buy back a monster amount of stock. And then when things turned, he said, look, I told you it was going to turn. You had a chance to get in. This seems very cut from the cloth of that playbook.
Well, I've been pretty consistent now, I think, for the last 6 or 7 years around, the relative priorities for the company. First and foremost, invest in our growth, positioning a product and services portfolio to be unique in its offering to the success of our customers. I feel like the company's performed well in that regard. And when we have cash that's excess to that need, to return it to our shareholders via repurchase and dividend. And we've been super disciplined about that. And the guidance we've just given is incorporating about a 10 million share count reduction, and that's part of what you've just spoken to.
Now, we do know that there's been still weakness in some of the, in some pricing in DRAMs. Are you saying that the word sustainability means that these companies, your customers, see it? They are unwilling to go down the path of just total destruction of margins. They are going to be considered about their buying, and that's one of the reasons that September could be the bottom.
I think we've been in that world for a long time, if I'm honest with you, Jim. Okay. We live in a world where profitable market share is the objective, not just market share for our industry and for the industry of our customers as well. Today, we live in a world where memory customers are all reporting in the range of 40 to 50% operating income. Memory revenue growth has been at an all-time high, and that's a byproduct of the fundamental value proposition that exists today in the realm of the evergreen verticals we talked about last time. The infrastructure needs of the world, the healthcare needs of the world, the agriculture needs of the world, redefining connectivity and cloud memory and storage and computation. And, that's a fundamental message that I think is relevant for understanding value of the entire semiconductor ecosystem.
In the time that you've been in this industry, you've been in it a long time, tell me how long it takes to build a greenfield DRAM plant now versus 20 years ago.
Well, it's everything is faster. The speed at which people build clean rooms today and install equipment, can run a year to two. But I think what's important is just because people have a clean room doesn't mean they fill it with equipment just because they can. The investments, the discipline from our customers today means they invest in capacity when they have demand for chips. And I think that's a commentary on health and sustainability in our industry. I mean, let's not forget that the semiconductor revenues in the last 4 or 5 years have increased by about $120 billion. And that's 0.2% of global GDP. And that reflects the increased value proposition of the industry in the broader data economy. And it's a terrific commentary on the opportunity for silicon, for equipment companies, and specifically for Lam Research.
All right, well, look, you did say that there was going to be a couple quarters of weakness, and now I understand that you're saying there can be a trough. So you were money good on the downturn. I'm betting you're money good on the upturn. Martin Nance, the CEO of Lam Research. I'm not going against this guy. Stick with Cramer.